Hello, and a massive hello to everybody. This is 50 pips once again, 3rd of July 2015. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. The fact that you're in here means you've had to understand to accept all the disclaimers here on the website and or else understanding that we're just performing some live tech analysis in a learning context for educational purposes only. Hey, Sape, how's it going? No need to raise your question. If you have a question, just ask it. Ask it. Just use the Q&A box. Okay, so what's going on, guys? So the current plan of action is what I'm going to do is I'm going to go through another bunch of questions now. So if anybody has any additional questions, just put them into the Q&A box. So I'll go through them now. And so probably maybe another 20-30 minutes or so. After that, we'll take another break. And then we'll come back and do one final review to just go through charts closer to the end of the day, at least in Europe, as in U.S. markets are closed, and we'll see what we get. Okay, so Mark, very echoey. I don't know. I haven't got that comment from anybody else. Um, yeah, I think everybody. Can anybody give me a check mark, one of those green check marks next to your profile if your sound's okay? Yeah, looks like you're the only one, Mark. Looks like you're the only one. Must be on your end. Okay, so what's going on in terms of the questions? So basically, um, a bunch of guys asking a different kind of question, but I think the summary is um, one was quite funny is your blog could be cooler. Why don't you refresh it? and the issue is that, I mean, of course, it could be cooler. There could be a refresh. I mean, just for it's just a free standard WordPress blog, right? There's nothing fancy. And I've thought about it for a few times. It's just, to be completely frank with you, I just don't have the time, right? I just don't have the time to do it. And I particularly don't really want to go and spend 5 grand or whatever to get somebody to do a really cool site. The point of the blog is just to try and pay it forward and just try and post some charts and things. Um, Again, there's a bunch of stuff on there for the people who take the time to go through it. They should find most of the things. So you never know. You might get a refresh sometime in the future, but it's not on the plans, right? Another thing with respect to the blog is why don't you post more videos and trade videos? I mean, in the past, I used to post some of those, in the trade videos category. And I try and do those, but it's a lot of it is just simply time issue, right? Because to record those live trade videos, I just have to focus on my trading, so it's just not that easy. And I've thought about posting some of the stuff we do in the weekly webinars, but again, even there, it would just entail a bunch of work. So having to go through it, edit the video recording, decide what to put, what not to put, and then it's always going to seem like I'm just choosing the best bits. So I think if you want to stuff live, we do it every day in the weekly sessions. But again, I think I post a lot of stuff, and we do free Sunday sessions. We're doing this, so I think there's plenty of stuff on there. Tweeting less. A lot of questions on tweeting less. I mean, there's two factors that go hand in hand with the tweeting less, Debbie, is that on one side, you've got the issue of just the market is moving less, right? So that's just a fact. The market is moving less. The market is not as fluid, as active as it was. We've got record low volumes being traded. So there's not that much to say, right? Things are staying pretty much in range. Now, the other thing's also different is that, a lot of people are following a lot of the news channels, a lot of the things. So there's not that much to say, right? I'm not going to retweet all the news and everything unless it's really important or is something that's interesting, because pretty much everybody's following that anyway. So again, the other thing also I've backed down a little bit is simply because I think people take some of the tweets out of context, and I don't want to give people the impression that some of the stuff is easy. So I just try and be a bit more careful, and again, then just sometimes a bit less interested because of the haters and the stuff. So all the funky business. So it's just not that interesting. I try to keep I try to tweet as much as I can, or when I see something interesting, but I've also realized to a certain extent that sometimes it does a bit more harm than good, because you try and talk about something and it's really difficult to explain in 140 characters, and then if you have to explain to somebody, you can't go on and get into an in-depth discussion with everybody, because at the same time you're trying to trade, right? So so then it seems like you're not being helpful. So I just try and tweet more interesting stuff, just a bit more, maybe try and focus a bit more on quality rather than quantity. I'm not sure I'm always good at that, but that's what I'm trying to do. Yeah, and in terms of yeah, I know it was interesting when I used to call trades and stuff. I just don't think it helps anybody, right? I think it doesn't help anybody. I think it's going back, I wouldn't have done it. I think I shouldn't have done it. It doesn't help anybody. Because it just furthers that impression that stuff is easy, or you don't know how much leverage somebody's going to use. You don't know. So I think in general, it's much better to frame things in context. The tweet is just is a static way of explaining something, and over the years I found that it's very difficult to explain things in a static form, right? Writing a book, I mean, again, we've talked about this in the past. I really don't think there's that much value to writing a book. First of all, because I think a lot of time book is just so you can say I have a book and try and gain respectability, or if you have to sell something, I'm not really interested. And furthermore, I think most of the interesting things, you don't have to buy a book. If you go through all the webinars, through the questions, through the Q&A, you can get a lot of the key points, right? And I fundamentally believe that the markets are constantly changing, constantly evolving. As we've discussed, there's some frameworks and the basics that are the same, and those are not too difficult, right? They're fairly basic. What's difficult in trading is understanding the context, being able to adapt based on that context, being able to adapt how you engage with the market in different conditions, right? And I've found over the years that what the tricky thing for people to internalize or for people to deal with is not understanding the basics, not understanding where to put a stop, not understanding where to take profit, not understanding where to enter, not understanding how to draw a fib or a trend line, is how to engage with those basics, right? And it's extremely difficult to explain or show somebody how to engage in a static way. So that could be with a tweet, that could be with an article, that could be with a book. Because you always have to fine tune, right? Nobody is static in the way they trade. Even the algos, there'll be, HFT firms, whatever, people will be updating algos sometime throughout the day even. There'll be somebody sitting next to the trader next day reprogramming the algo as the day goes on, right? Markets change, you have to change what you do. So I think the best way to help people is to do live stuff. That's why I don't like to prepare things. I like to do stuff and explain things live as they happen, because you can never get that live context anywhere else, that learning. So sure, you can read a bunch of books, you can back test a bunch of charts, but unless you really live through that live with all the emotions that go with it, boredom, fear, aggression, whatever, right? It's very difficult to really learn. And again, the book takes ages to write. You have to deal with a publisher. God knows what is just really not on the cards here. Okay, thanks, Debbie. Okay. So, yeah, any questions on that? Yeah, are the markets rigged? We get that all the time. No, I don't think the markets are rigged. Um, no, yeah, it's almost to one side. I almost feel I don't think this is a good way of expressing myself, but I'm going to say it anyway. I can't be bothered to debate that simply because I think it's, you know, nothing is perfect. Right? We've talked about this before. I think nothing is perfect, but the bottom line is, and I can't remember when we talked about it, but anybody who's complaining about the market is rigged is probably somebody who's not profitable, right? Just keep in mind that the opportunity you have nowadays to trade in terms of trading from your house, trading from your laptop or your mobile computer with extremely low commissions, with extremely good technology. That's all thanks to all the evolution the markets have done, and that's also thanks to a lot of the HFT firms, all the algos that are pushing the boundaries, right? So if you think the markets are rigged now, try trading 20, 30 years ago. Try trading when, any order was 100 pips, $100 commission, and you had to use a phone to put your order in, right? I think that falls in the category of everybody trying to find an excuse for why things are not going their way rather than looking in the mirror. Were the markets easier if you had certain access when there were less participants? Probably, but then even then they were only open to very, very large accounts and to a very select group of people, right? The opportunities we have now as private retail traders are really unparalleled, right? Okay, why 50 pips instead of 500 pips? To be honest, I kind of forgot. Not really. I mean, I remember there's probably something to do with 50 cent and 50 pips. It just sounds cool, I guess. But really, one of the things which started back, I don't know, it's probably 6 years ago. I don't know. I can't remember. When I started on Twitter, I used to call all my trades live, and the target was to book 50 pips a day. So it's a melange of those things, kind of, right? Again, I wouldn't read too much into it. Um, can somebody really make a living from trading? Yeah, sure, 100%. Is it easy? No. Is it impossible? No. Right? But can somebody make a living out of trading? Sure. We discussed that in that. Hey, thanks, Debbie. We discussed that in that previous segment. We talked about that a bit more. So you might want to go back and listen to the other Q&A. But the big function of that is there's two things, right? Is when you're talking about trading for a living is how much do you need to live? A big question. Some people can get by with $1,000 a month. Some people can't get by with $10,000 a month. So that's the first question. And then it's going to be a function of that related to your own account size, right? So if you need 10K a month to live and you want to trade off a 10K account, is it possible? Maybe. Is it probable? Not really. You might make it for a couple of months or a year, but sooner or later it ain't going to look so pretty, right? So it's definitely possible, but it's a function of being realistic with your risk rewards. And Henry, if you're interested in that, I'd click on the Darwin X link and just go through the Darwin X stuff on the blog. you'll get a lot of interesting talks on that and view on that. But again, I don't want to plug anything today, so I'm just here to pay it forward. So I'm not going to talk about any detailed question. I'm not going to answer, guys, detailed questions on the weekly webinars or detailed questions on Darwin X. I'm not going to answer any of those because I don't want this to be about plugging anything. There's plenty of information on that on the blog. If you're interested, look at it, and you can always use the contact, but I'm not going to talk about that today, okay? And again, that's the tricky one. A lot of people asking, do you need a 100K account? Do you need a 500K account? Again, it depends on what you're looking to make. I'll leave it at, it's a lot more realistic to shoot for 20-30% a year than 20-30% a month, right? Then you'll have to do your calculations. But it's difficult to say a number if I don't know how much you need to live every month to. The only thing I would say for those people that are going live, quitting their job, whether it's for trading or whether it's for any other business, you want to make sure that you've got at least, 6 months, even a year backstop where you can cover all your bills, where you don't have to earn absolutely anything from the trading, okay? And even there, that doesn't mean go live when you've always been losing money, demo or live, and then you just go live. You have to make sure that you have a balance that's net profitable, and then you take it live. But you also want to make sure when you do go live that you have enough funds to survive, even if you're not making anything from your trading for 6 months to 1 year. And also, you want to make sure that your account is big enough that if you get into trouble, all of a sudden, you have to be able to continue trading your strategies. You don't want to go live with an account size that if you have a couple of bad months, all of a sudden you have to completely change what you do because you don't have enough capital to continue to trade the way you demoed or you were trading profitably before, right? Do I still aim to make 50 pips a day? Again, sometimes I really wish I hadn't done that. Because, 50 pips a day doesn't mean anything, right? Right, because it really depends on what system you're trading, what strategy you're trading, how much you're trading, Neil, right? What's important is what do those 50 pips correspond to in terms of money, right? So there's no point shooting for 50 pips a day if those 50 pips equal $50 and you need $300 a day to pay your rent, right? Now, do I think it's possible to shoot from average making 50 pips a day? Yeah, sure, depending on what strategies you're trading. But it could be much more interesting and much more profitable shooting for 20 pips a day or something like that. And again, I don't like to trade really with a specific monetary or pip target, but it really depends from one situation to another, okay? As far as round number plays, if you go back on some of the other webinars, and I should do a better job at trying to categorize them, but we've talked about this in the past, in terms of round number plays, if it were just as easy as get long or get short at every 00 or every 50 number, everybody would be a millionaire, right? It's simply not that easy. So are there strategies to be played around round numbers? Sure. Would you expect round numbers to be defended? Sure. But keep in mind that all round numbers are not created equal. So the longer they haven't been tested for, the longer they haven't been touched for, the more interesting they will become, or the more protection you'd expect to see on the other side, the more gravitational pull they may exert, right? But they're not magical, right? Exactly. Setups come when they come, not when bills are due, right? But again, it really depends, right? You know, you could be trading a very large account on a one-to-one leverage, and you may be shooting for 10 pips a day, and that's fine. Let me give you another crazy idea, right? Instead of having a specific pip target for the day, how about you have a number of setups you trade, and you trade within defined times of the day or whatever, and you trade the setups that set up, right? And if those setups mean that on a specific day you make 10 pips a day, you made 10 pips. If that means you made 100, you made 100. If that means you lost 50 or lost 100, you lost 100. Keep in mind, you can only take what the market is willing to give you. You can't force the market. So you have to be, and if you haven't read the latest, go back on the blog, there's a post called Friday Musings where I talk about these things. You know, you have to understand that you have to be flexible enough. You have to be rigid enough to be able to stick to your rules and your setups, but you have to be flexible enough to understand that the market changes and conditions change. So there's no point trying to be stubborn and aggressive, trying to take 50 pips out of a market that's just not moving. There's no point trying to be stubborn, trying to take 50 pips out of a market that's not setting up for the setups you're trying to trade. Because what that translates to is that you're just going to force it. That means usually get in trouble. Or you're going to have to look for different ways to trade. You're going to have to change your rules. You're going to have to change your setups. And that all equals disaster, right? So you can't force it. And also that means what happens if you've got a day where it's just a day that's playing to all your setups, and you have 5-10 chances to trade, and what, you're going to stop after 3 simply because you made 50 pips even though all those other setups were valid for you? Don't be restricted. Don't be constrained. Don't constrain yourself. You know, make hay when the sun is shining. It's the same discussion as the P&L. You know, a lot of people focus on the wrong priorities, right? They set a monetary goal or a pip goal, but it doesn't make sense to have a pip goal or a monetary goal if you don't even know what setups you trade. You have to understand what your setups are, what your strategies are, and then based on those, you see what your results tend to be. And based on those, that's where you derive, when you see what your percent win rate is, when you see what your average win rate is, whatever, from there you can derive what that needs to be in terms of pips or in terms of nominal. Not the other way around. It's a really important point, okay? Okay, thanks. I forgot the trick. Thanks. Make sense? Okay. Any other questions? Shoot. Let me go through my notes. Again, not an awful lot. Happening in the markets. Can I see your trades? You know, I don't call the trades. If you know all that we talk about, all my trades in the weekly webinar. Again, if you're interested, look at that. I think I've answered most of the questions. We're running on about 25 minutes. Let's see if we get another couple of questions. I'm just going to go through the questions here, and then we'll wrap this up so that we can have a recording that's not too long, and then we can take a bit of a break. I can rest my voice, and then we'll do another update, which will be charts. We'll go through charts, right? What do I think of blogging your trades as a journal? Yeah, what I would say, whatever works for you, right? If you want to blog them, if you want to put them in a journal for yourself, of course, especially when you're learning, it makes sense to journal what you're doing, analyze what you're doing, and try and make sure you do more of what you do well, less of what you do bad. What I wouldn't recommend, and again, not to get any haters on board, the classical thing, which a lot of people do, right? They start with the good idea of blogging their trades just for themselves as a journal entry. Then your blog can be private, right? Or whatever. But if you're going to do that, don't do the classical thing where you call the blog like, I don't know, Master Pips, Super Pips, Great Pip Master, Making a Million, and you call yourself something funky, and then you get a really cool avatar, and then you call yourself Hedge Fund Manager, Star Trader, and then because what happens is you're just fooling yourself. Because first of all, anybody who's impressed by that, it is really not worth impressing. And so, but that's beside the point. The tricky thing I see is then a lot of people then end up believing the dream, right? And it's not, you'd be how many people just they end up believing the dream, and then it just spirals out of control, right? So if you're doing something for yourself, do it for yourself. But I think, of course, especially, it makes sense to journal what you're doing. The other thing is, I wouldn't be obsessed about it, right? A lot of people say you need to print out every single trade you do, take a snapshot, a screenshot of every trade you do. So then what that inevitably happens is, somebody thinks they're doing things properly because they have 20 folders with a screenshot of every single trade they've taken for the whole life. They got 500 million trade screenshots, and what they do is on the weekend they go back and look at all those trades. I don't think it makes a lot of sense. I know some people are not going to like that, but I don't think it makes a lot of sense. I think that's one of the things people try to tell you, but I don't know anybody who does that. I don't know any professional trader that does that really. And I don't think it serves a purpose, because what that does is that takes out, it's kind of like back testing on a tester. It takes the context out of it. So you took a silly trade on non-farm payrolls or whatever. What are you're gonna print it out, then you're gonna go look back on it on the weekend. So instead of relaxing on the weekend, you're gonna go back and look at it, and then you're gonna say, oh, what a dick. Sorry for the technical term. I shouldn't have taken that trade. Right? Next time, I shouldn't take it. Now, no shit, Sherlock, you shouldn't take it. But everybody can see after the fact. Or I went a bit too early. But that's not going to do anything to change how you're going to react in a live environment. Right? That's why people are compounding, fighting the same demons. And I understand, and I know some people are not going to agree with this, so it's just my opinion, right? But a lot of people aren't going to agree with this. But people compounding the same mistakes because they keep on getting in trouble trading. They print everything out. They go over the weekend. They look at it. Yeah, sure, I should have gone in a bit early. I should have trailed my stop here. But that's on paper. Again, going back to our discussion, that is the static argument. And everybody is a hedge fund manager, star trader on paper. And everybody can see what's right or wrong on paper. Everybody can optimize something on paper in a static environment. The difference is, can you take it to the next level? Can you correct yourself? Can you perform? Can you do things in a live environment with all the things that come with doing it live? And as far as I'm concerned, you can read all the books in the world. You can backtest all you want. You can print out as many chart logs as you want. You can go through them and think you're the most diligent person because you spent 20 hours a day reviewing screenshots. But that's not going to help you when you're dealing with your own demons, when you're dealing with trying to assess market reaction and context in a live environment. So that begs the question, hey 50, how do you do that then? Well, the only way you do that is with screen time, right? The only way you do that is screen time. But also screen time itself is not the cure to everything, because if you're looking at the wrong things, you could be looking at your screen 20 hours a day and still it's not doing anything. You have to understand how the market works. You have to understand what things are happening, and then you have to look at things in the right way, really looking at stuff. You'd be surprised how many people say, I've been looking at charts for 10 years. And then you say, well, have you noticed this? Oh, no, I never noticed it. Well, not through any fault of themselves, but they're looking at things in the wrong way, right? So if you're looking at a moving average, if you're looking at it, try to really look at it. Try to really understand what's going on. Try to really dig down and understand the fundamentals. And when you're looking at things, do it in a disciplined manner. Don't spend hours in front of the screen watching a movie at the other time, doing something else in another time, whatever, looking at it on your... You really have to concentrate. Nobody's ever gotten good at anything. Nobody's ever created anything spectacular. Nobody's ever had exceptional results by just doing something on the side or doing something in sim on paper. You have to just get out there and do stuff and do it properly with hard work, right? Okay, so let me stop before I continue to rant in an out of control fashion and then everybody's going to leave. Greek referendum ideas. I don't know what you mean about Greek referendum ideas. If you're talking about trade ideas, you might want to watch the first update. We talked about it a bit. We'll talk about it in the next update when we look at charts. But I'm going to be a bit cautious about that because I don't want anybody to get into trouble trying to trade some kind of gap up or gap down. Keep in mind also that the brokers may do some funky stuff over the weekend, change margin requirements, so you want to be cautious with that. Okay, so let's cut this here. I'll post the recording and we'll do an update in about an hour or so, something like that. Okay, we'll look at some more charts, okay? Thanks for listening, guys.